What's going on, everyone? Welcome back to the Independent Experience. I'm IndieXP Bullion, and this is your morning market wake-up call for Tuesday, September 22nd, 2020. Guys, we dropped a video last night. That is for our 750 subscriber goal. We got 3 items that we're giving away. It's massive. It's huge. It's absolutely huge. You're going to want to go and check it out. I'm going to post a link to that video down in the description of this video. You're going to be hearing a lot about this. You have until October 13th to get in on the action, so make sure you check it out after this video, of course. Let's go ahead and take a look at the markets and see where we're going to be starting today off at. Gold is down sharply, and this is going to be a trend over most of the video. Everything is down sharply. We had a huge sell-off yesterday in precious metals, and we're going to get into an article at the end of this that plays a big part in that, I believe. So like I said, gold was down significantly, currently at 1914.06. Silver also down very significantly at 24.42. That gives us a ratio up at 87.37. Platinum is under $900 again, currently at $898.85, and palladium dropped over $100 yesterday. It's at $2341.92. In other metals markets, rhodium actually held steady yesterday at 13,100. Copper is at $3.10. Nickel is at $6.70. Aluminum steady at 79 cents. Zinc steady at $1.14, and lead is at 85 cents. We saw a drop in barrels of crude oil, but we are starting to see a little bit of a rebound. Those are up 29 cents at $39.60. Had a tumultuous day on Wall Street yesterday. The Dow was down 509 points at 27,147.70. The Nasdaq was down 14 points at 10,778.80, and the S&P 500 was down 38 points at 3281.06. If you guys happen to trade in Bitcoin, you were not shielded from the losses yesterday. We are down currently at 10,488.21, and if you happen to exchange the gold back, either the Utah or the Nevadan, those are down, exchanging at $3.20. All right, so what caused the big sell-off yesterday? Well, one of the reasons why, I mean, the dollar was up. The investment markets overseas were steady. There were some winners yesterday, but there was a big story that came out of the banking sector. This comes to us from Reuters. This was breaking news yesterday. Global banks seek to contain damage over $2 trillion in suspicious transfers. $2 trillion, guys. Global banks faced a fresh scandal about dirty money on Monday as they sought to limit the fallout from a cache of leaked documents showing they transferred more than $2 trillion in suspect funds over the last 2 decades. This is a long list. Hold on. HSBC, Standard Chartered, Barclays, Deutsche Bank, Commerce Bank, JP Morgan Chase, and the Bank of New York Mellon Corporation were all among the lenders named in the report by the International Consortium of Investigative Journalists and based on leaked documents obtained by BuzzFeedNews. I never would have suspected that BuzzFeedNews would be bringing us the hard-hitting stories. While some banks said many of the transactions happened a long time ago and they have since put in robust anti-money laundering checks in place, investors were clearly worried. HSBC and Standard Chartered shares touched their lowest levels in as much as 25 years, although they fared a little worse than their peers amid a wider sell-off in global stocks. The reports were based on 2,100 leaked suspicious activity reports, or SARS, covering transactions between 1999 and 2017, filed by banks and other financial firms with the U.S. Department of Treasury's Financial Crimes Enforcement Network, the FinCEN. Banks have spent billions bolstering their anti-money laundering procedures in recent years after many faced huge fines for rule breaches. They were required to file an SAR whenever handling funds that cause grounds for suspicion of criminal activity. But an analyst of the 2100 SARs obtained by BuzzFeedNews, which worked with the International Consortium of Investigative Journalists and other media organizations, found that some were filed months after the suspect transactions took place, and that often little other follow-up action was taken. Quote, this brings out the point that managing financial crime risk goes beyond making SARS reports, said Atelka Bogardi, a Hong Kong-based financial services partner with the Norton Rose Fulbright Group. Shares of Deutsche Bank which was involved the largest number of SAR reports in the BuzzFeed's dossier, were down more than 8% at one point on Monday following the reports. The bank said that the issues raised were, quote, historic, while the German finance minister said on Monday that the cases linked to Germany in the reports had already been dealt with. It seems like if they had the most number, I'm surprised every single one of them have been dealt with. Many of the suspicious transactions were linked to companies incorporated in Britain or offshore Britain territories, prompting calls from action groups for tougher rules. If the government cares at all about the UK's reputation globally, it must stop rolling out the red carpet to the criminals and the corrupt, and refuse to legitimize their money through our companies and banks, Global Witness said. The UK government said in a statement that, quote, criminals should not be able to profit from their illegal activities in any circumstances, and we have taken robust action in recent years to crack down on the dirty money. It added that it was working on reforms to its corporate registry system that will require more checks from company directors. HSBC shares fell more than 6%. Also said the information in the reports was historic, while Standard Chartered, which dropped 5%, pointed to recent investments to improve its control procedures. Shares of JP Morgan and Bank of New York Mellon, which were also in the top 5 banks mentioned on frequency of reports, fell 2.6% and 2% respectively. Bank of New York Mellon told Reuters it could not comment on specific SARs, but it fully complied with all applicable laws and regulations. JP Morgan said it has thousands of people and hundreds of millions of dollars dedicated to this important work. The article does continue, and we'll go ahead and stop it there. So what do you guys think? You know, all these banks are involved in money laundering, it appears, according to these reports. They have taken steps to remedy. It sounds like to a certain extent, but obviously if banks are making money, they're not going to want to stop making that money. They don't really want to spend a ton of money to try to stop making more money. That makes sense. But obviously all these large banks are also very large holders in gold and silver, in the physical gold and silver. And so that could be why we saw a little bit of a drop, because, you know, these banks, you know, they hold the silver, you know. So, you know, let me know what you guys think down in the comments. I'd be very interested to hear what you have to say on the topic. Guys, I do greatly appreciate every single one of you. And if you happen to appreciate old IndieXP, why don't you go ahead and hit that thumbs up button for me right there. Helps me out immensely. If you happen to be new to the independent experience and you want to keep up to date on when all the latest and greatest content is coming out, go ahead and consider hitting that subscribe and jingle bell right there in the corner, bing bong, so you can stay notified of when all the content is coming out. Speaking of content, the box is going to pop up right here. If you're watching this morning, this is going to be the giveaway video. So you make sure that you want to catch that at the end of this video, guys. It's going to be right here. Make sure you get in on that. Follow the rules. That's important. Follow the rules. They're pretty simple rules, actually. So go ahead and make sure you get on over there for that. Guys, I've been IndieXP Bullion from the Independent Experience, and I'm here again to remind you, if the women don't find you handsome, they should at least find your pockets heavy.